everyone, my name is Manahil Rizwan and I'll be starting off the investments group project. So in this video, we'll be explaining the stocks in our portfolio and go into detail about each stock and why we chose to buy that certain stock. So to start off, we have Amazon and this is AMZN, and just a little background information. Amazon.com is an American multinational technology company based in Seattle, Washington. It focuses on e-commerce, cloud computing, and artificial intelligence. Just a little bit of general information. The PE of Amazon is 93.89 and the earnings per share is 34.15. So the reason we decided to buy the stock is because, first of all, it has a debt to asset ratio of 11%, which is a really good indicator that the company has more assets than they do debt, because generally a 40% or less is a good indicator of this. Another reason is because with COVID-19 and fast-growing online retail, many consumers turn to Amazon for their daily needs, and so Amazon is expected to have a 30% rise in earnings in 2021, and their revenue is also expected to climb 18%. Similarly, their ROE is 32.365, which is quite high, higher than the industry ROE of 27.05%. And the last point is that studies have shown that stocks of founder-led companies tend to outperform in the market, and Amazon is being led by Jeff Bezos, who is the founder.
Hello, my name is Andrew Rodriguez, and the stock that I chose for the stock pick simulation is Salesforce, stock symbol CRN. Salesforce is a cloud-based software company based in San Francisco, California. They offer on-demand customer relationship management tools, hence CRM. These services are used to manage and share information regarding sales, customer service and support, marketing operations, and data analytics. Value Line rates their financial strength at a B++, and its price gross persistence rating is 100. And I'll explain why these are true in a minute. Bloomberg says that the total assets of CRM are valued at over $59 billion, and total liabilities are at $18 billion, making their debt to asset ratio 10.52%, which is great. Any company under 40% is the general rule of a healthy business. Now, their gross profit each year since 2017 has gone up by over 20%. The stock in 2020 grew roughly 23%, and in 2019 grew 14%. As of 2020, their revenue, 70% of revenue earned was in the US, 20% from Europe, and 9% from Asia Pacific. In recent years, more growth has been seen outside of the US, and I believe this is something that will continue. Another reason that makes this company, I believe, a strong buy is the moves they've made in recent years to stay profitable and stay relevant as tech continues to advance. In 2020, they bought Slack, and in 2019, they bought Tableau. Now, these software companies have both been growing on their own even before they were purchased by Salesforce, and I believe this is because big data has become essential for companies. And as this continues to happen, I believe Salesforce relevance in different companies will only grow, and for that reason, I believe Salesforce is a strong buy.
All right, Moderna, ticker MRNA. I'm sorry I have to record this on my phone. I am having some trouble, but some background information on Moderna is Moderna was founded in 2010, and they are headquartered in Massachusetts. Moderna engages in the development of transformative medicines, and they have successfully produced a vaccine for preventing COVID-19. As you can see here, I highlighted the price to earnings ratio in red because it is substantially bad. Before I start, I am going to note that Moderna is not a long-term position for me. Going back to the price to earnings ratio, the average price to earnings ratio for the S&P 500 has historically ranged from 13 to 15, and in 2020 it has shot up a lot, so that is noted. Some buy indicators are that Biden announced last week his administration is ramping up to coronavirus vaccine allocation and distribution. A part of this plan, Biden is planning to purchase 100 million more doses from Moderna and 100 million more doses from Pfizer and BioNTech combined. Moderna released in an article last week saying that their vaccine is effective against a couple new coronavirus strains. And to add to that, I have in a collaborative study with the Vaccine Research Center at National Institute of Allergy and Infectious Diseases, the substance mRNA 1273 provided effective against all COVID strains tested, including those that have been emerged in the UK and South Africa. As you can see, this data shows that mRNA 1273 is best in class and should produce pretty well numbers going forward.
Hi, I'm Brandon, and the stock that I chose for the stock simulation is Boeing. Currently, it's valued at $202.71 per share. And now for some general information about this company. It's technically considered to be in the aerospace and airline engineering sector. So it develops major planes and jets for airlines that we are very familiar with, such as Delta, American Airlines, JetBlue, and Southwest. Furthermore, it develops rockets and satellites for aerospace companies, such as NASA. Boeing was founded in 1916, which makes it the oldest company within this sector. Also, Bloomberg values this company at $116.7 billion, and its total assets are valued at $152 million. Furthermore, with its liabilities valued at $58 million, it makes the debt-to-asset ratio 38%. And now for some general stock indicators that led me to pick this stock. Financial strength as measured by value line is B. The technical rank is 2, which is among the top 2 companies within this sector, and its price growth persistence is 80. Now this growth, persistence, and the general optimism in choosing this stock is primarily dependent upon the rollout of the vaccines. As it currently stands, the Biden administration plans to have major rollouts of the vaccine through spring of 2021. Therefore, the third and fourth quarters of this year proved to be an effective and hopefully optimistic time frame for Boeing to be able to make up the lost revenue from last year's COVID-19. Therefore, with many people being more comfortable with flying and airlines demanding more planes and jets, I believe that this stock is a great pick.
Hello there, my name is Simone Di Mattia, and I've chosen to invest in Cipher, stock symbol PFE. Amongst the most notorious COVID-19 vaccine developers, we have Cipher, a drug manufacturer based out of New York. Cipher's vaccine, which has now been approved by the FDA for commercial distribution, possesses the highest overall efficacy relative to competitors, making Cipher stock a sound investment for income investors, as it's currently experiencing a 4.35% dividend yield, and for value investors alike, as the share trades at less than 11.5 times expected earnings. Additionally, Cipher stock is ideal for conservative investors, as the share has a beta of 0.9 and a return on equity of 13.26%, which is higher than the industry's average of about 11.98%. Although PFE is a relative sound long-term investment, the company is currently experiencing a 62.2% debt-to-assets ratio. Associated with the seemingly unhealthy state of the company are the lower than expected 2020 Q4 projections. The company's vaccine revenues diminished by about 22% due to the CDC's vaccine allocations guidelines at the end of 2020. Nevertheless, the company's ROE depicts a different story, as the firm knows how to effectively use its assets to generate further profits. Lastly, the company has pledged to administer over 75 million vaccines to Europe by the second quarter of 2021, thus making Cipher a profitable long-term investment for the conservative investors, as overall revenues are expected to increase in hand with higher vaccine rollouts. Thank you, and have a nice day.
Hello, my name is Jennifer Osorio, and I chose to invest in Tilray. Now let me tell you a little bit about Tilray. Tilray is a Canadian pharmaceutical and cannabis company incorporated in the US and headquartered in Toronto, Ontario. Tilray also has operations in Australia, New Zealand, Germany, Portugal, and Latin America. Cannabis has been legal in Canada for years now, and it's becoming increasingly popular in the US. With Joe Biden's recent election and Democratic support, the cannabis industry is expected to grow exponentially. Currently, 9 states and Washington, D.C. have legalized recreational marijuana, while 29 states have legalized medical weed. Democrats now in control of the Senate, Congress could finally pass the MORE Act, which would open floodgates to the $78 billion U.S. marijuana market. In recent news, Tilray shares soared the last 2 months when plans to merge with its rival Canadian pot producer, Aphria, were released. Now, this merge would create a massive multinational company with business in Canada, the U.S., and Europe. This combined company also plans to take the Tilray name and Tilray stock sticker. Over the past year, Tilray's stock price has increased about 9%. Tilray's current volume is 20 million. Market capitalization is about 2.55 billion, and Tilray's 5-year beta ratio is 3.12, which is slightly risky but provides high returns. Given the upward trend, Tilray stock is expected to rise 115.44% during the next 3 months. A win for the Democratic Party really has paved a way for the cannabis industry. Given Tilray's growth forecast, I believe now is a good time to invest. Thanks for watching.